Negativity coming through today, but no surprise there. We have had a good run over the last few days.
Yes, definitely. I think it's quite normal, once you've actually rallied relatively strongly in the previous couple of days to kind of have a day or two when markets just really like consolidate. I think the rally has maybe taken quite a few people by surprise because obviously sentiment was pretty bearish going into the year, but that is why kind of markets rally. So I think investor positioning was kind of very much against cyclical stocks. And what you're seeing now is just basically the winners of last year maybe taking a little bit of a breather, mainly the defensive shares, some of the gold counters, and some of the kind of not really lower quality names, but maybe perhaps the more cyclical names that had a tough second half of 2011, really just rallying strongly. I think still quite a few people are sitting on the sidelines, not quite perhaps knowing what to do. So if you kind of have to press me, I kind of wouldn't be surprised to perhaps see the risk rally maybe carry on maybe a little bit longer.
With regards to the performance that you expect going into 2012, Rhynhard, do you think it's going to be a very good year for equities in South Africa, given the fact that we just heard bad news coming through from Europe again, and we just know how negative the markets can get on the back of negative news out of Europe?
Yeah, sure. I think broadly speaking, I think it's going to be a positive year for equities, and I kind of hate to say it's going to be marginally positive, maybe 10 to 15%, because that's what all fund managers always say. If we don't really know, we say the markets will be up by about 10 to 15%. But I really actually do believe it. So I think we've had a strong start. I think there will still be lots of volatility. All of the issues in Europe remain. The US economy seems to be on track, but I think data is perhaps going to get a little bit worse. I think China looks okay for now, but there's certain risks of a slowdown. I don't think markets are particularly cheap, but I think the positioning of investors has been actually very cautious, and select cyclical shares actually do show reasonable value. So I think it's a market that we'll have to trade, but broadly speaking, I think it's going to be a muted year for equity returns, much lower than previous years, but perhaps a little bit better than last year, because frankly speaking, I think most of the risks are actually a little bit better known than in the start of last year. Yeah. So that's my forecast.
And I'm going to keep that and make sure that you live up to your forecast. But in the meantime, earnings are also very much under the spotlight, and we are hoping for a better year. Cash build out with first half revenue up around 9% over the same period last year. Cash build is in an interesting space. Were you expecting a far better number coming through there? Very close to that 10% level, but perhaps not close enough.
No, look, I think it was very much in line. If you look at the trading updates that they have published in the past, top line revenue growth was roughly 7 to 9%, and this time it came in at 9%. I think what is interesting is that inflation is becoming a greater component of their revenue growth. Inflation is now running at about 5%, whereas in the past it was kind of 1 to 3%. So they are certainly benefiting from the slightly weaker rand, and that'll also drive their revenue growth going forward. It's just really just a very good little company. It did very well last year. I think one of the top performers, up on a total return basis close to 25%. So the PE multiple is now a little bit steeper than what it used to be. I think it's about 13 times forward or so. Perhaps a little bit more fully valued, but great balance sheet. I think there might be the potential for a special dividend. So I actually think it will continue to do well, although perhaps less well than what it did in 2011.
Rhynhard, what about another company, perhaps also slightly smaller than the normal companies we talk of? Eleni's stronger performance coming through today. We know that the company is quite excited about the rollout of DTT in Southern Africa. Are you also optimistic about Eleni's going forward?
Yes, it's a small company which we don't really look at often, but I kind of have watched it relatively closely. I think what has kind of really driven the earnings was really their Megatron business, which is really the transformer side of the company. That tends to be relatively lumpy, and if they do sign 1 or 2 major contracts, then earnings really does get quite a big boost. I think going forward, the DTT rollout, as you pointed out, will be a significant portion of their earnings. So the growth prospects actually does look very good. It's one of those ones that are on a single-digit PE multiple. So I think if they can kind of manage their their growth correctly, I think it could actually be a very good performer going forward.
Rhynhard, of course, and we know that actually Ellie's initially performed quite well earlier in the trading day, up almost 1%, and now ending the day down 7%. But let's touch on the top 40 performance. Goldfields up 0.7%, Harmony also gaining ground, Anglo Gold also at the top of the top 40 today. No surprise that gold miners haven't had a fantastic performance. We've seen a bit of currency weakness today, and the gold price has been doing relatively well over the last couple of days, despite the fact that the gold price is in negative territory right now.
Yes, I must say, I think going into 2012, I still remain broadly constructive on the outlook for the gold price. Rates are still relatively low and will continue to be so for a long time. I think quantitative easing will perhaps not be as great as in prior years, but we probably will get a little bit of that in this year. And gold equities are still kind of dislocated from the rand gold price and have really derated significantly from multiples close to 20 times to actual single-digit PE multiples. So I would much rather play the sector through the gold equities. I think earnings leverage will come through when they actually report now. They did not have a great December, and they're kind of struggling a little bit now because as I said earlier, those kind of stocks that actually didn't do well in 2011 are kind of rallying now, and the more defensive counters are kind of struggling. So I would probably place gold equities in that category. But broadly speaking, I think gold equities are showing quite significant value at current levels.
When we saw, looking at some of the negative stocks and negative performances in the top 40, it seems that banks gave up quite a bit of ground today. Again, no surprise there, given the fact that we have seen quite a good run. Are we starting to see a bit of a rotation coming through with regards to the retail stocks into banks? Do you think that this is a trend that could be sustained down the line?
Yes, definitely. I think if you look at the banking index, it's kind of a group of stocks that have actually done relatively well the last month or two, and the banking index have kind of broken out of that large sideways trading range, and obviously they've significantly underperformed their kind of retail counterparts. I've kind of said for a while now that I think that the share prices of most of the retail shares are actually very overvalued, and I think perhaps this is the year when they finally do underperform. I'm not a buyer of the retail sector, so I don't think it's necessarily the worst trade to trade into SA banks. But having said that, they have rallied relatively well. The PE multiples are roughly about 12 to 13 times. But then again, earnings growth should be ranging from about 15 to low 20%. So I don't think there's a lot in it, but I would rather be in the banking sector than in the South African retail sector from an investor perspective.